Hey everyone, mutual funds are a great investment option to create wealth and achieve our financial goals. However, in the last few years, many people have started investing in index funds. Now, if you are new to the world of index fund, then in this video, I've explained what exactly is index fund, then what is the key difference between index fund and mutual fund, and finally, which is the right investment option. Alright, let's get started. An index fund is a type of mutual fund that aims to replicate the performance of a stock market index like your Nifty 50 or Sensex. For example, let's say you are bullish on Indian economy and its growth and you want to invest in Indian economy. Now, one of the options is to invest in Nifty 50 based index fund. Here, Nifty 50 is an index that includes top 50 companies of India in terms of free float market cap. Now, if you invest in Nifty 50 based index fund, then your money would be invested in the same exact allocation as per the weightage of the stock in the index. For example, if Reliance is a weightage of 10% in Nifty 50, then out of rupees 100, the fund manager would invest 10 rupee in Reliance. Likewise, the allocation in all 50 stocks of Nifty 50 would be done on the basis of their weightage in the Nifty. Moreover, this index is dynamic in nature. It means there are regular reviews of index and companies that perform well get an entry into the index and companies that does not perform well get exited from the index. For example, in Nifty 50 index, if there is a company that doesn't do well, it moves to Nifty Next 50 category that includes stocks ranking from 51 to 100. And companies that perform well in Nifty Next 50 category get an entry into Nifty 50 index. So here the fund manager has to simply replicate the index by buying all the stocks in the index, and allocation is also decided by the weightage of the stock in the index. By the way, there are multiple index funds that replicate various index. You have Sensex based index fund that replicate the top 30 companies of India. Then we have already discussed Nifty 50 based index fund that replicates top 50 companies of India. Likewise, you have Nifty Midcap 150 index. Likewise, you have Nifty Small Cap 250 index. Then you even have sectoral index fund like your Nifty IT index fund, Nifty Back index fund, and so on. Please note that there are multiple AMCs and hence you will find multiple index funds within each category. For example, if you want to invest in Nifty 50 index fund, you can select either SBI Nifty 50 index fund, SDFC Nifty 50 index fund, UTI Nifty 50 index fund, Navi Nifty 50 index fund, and so on. Let me show you a practical example. So when you visit Grow website, on the left side you can see various filters. If you scroll down to category and expand to the category, you will find the option of index. When you select index, it is showing 152 index fund. On top, you have SDFC index, S&P BSE Sensex direct plan growth that basically replicates Sensex index. You can also see the returns in last 1 year, 3 year and 5 year. Then you have UTI Nifty 50 that replicate Nifty 50 index. Then you have Nippon India Nifty Small Cap 250 index. You even have ICICI Prudential Nasdaq 100 index fund that invest your money in top 100 companies of US. Now, if you want to know more detail about the fund, you can click on it and it will show you the NAV movement over the period of time. Then you can see the rating, fund size, etc. Then if you scroll down further, you can see the return calculator that calculate returns based on monthly SIP as well as one-time investment. You can select SIP amount. Let's say you made an SIP of 10,000 rupee, then it will show you the return in past 1 year, 3 year and 5 year. You can move the slider to see the total investment and investment value. Please note that this is for past data and this return keep on varying based on market performance. Then if you scroll down further, you can see the top 30 stocks in the index and it includes your Reliance with 12% weightage, then SDFC Bank with 10.7% weightage, then ICICI Bank, SDFC Limited, Infosys, ITC, TCS, L&T, Kotak Bank, Axis Bank, HUL, SBI, Airtel, Bajaj Finance, Asian Paints, Mahindra & Mahindra and so on. If you scroll down further, you can see the sector-wise breakup. So financial sector has the highest weightage of 42% in Sensex, followed with tech, then energy. You can also see various ratios like your alpha, beta, price to earning, price to book, then minimum investment amount, returns and ranking, peer comparison, expense ratio, fund manager detail and so on. To invest money, you can simply create an account with Grow and invest directly. The best part is there is zero commission. Your investment is in direct mutual fund without any middleman. And you can find over 5,000 mutual funds in a single platform. Now let us try to understand the difference between index fund and mutual fund. First of all, index fund is a type of mutual fund. Basically, mutual fund can be divided into two categories based on investment style: active mutual fund and passive mutual fund, which is also known as index fund. So what is the difference between active versus passive mutual fund? I've identified 5 key parameters to clearly help you understand the difference between index fund and mutual fund. So first parameter is investment strategy. The key difference between active and passive investment strategy is that in active mutual fund, fund manager actively buy or sell stocks based on their own analysis, whereas in passive investment strategy, the fund manager simply aim to replicate the index by holding the same stock in the same proportion as the index. Then second criteria is fund management. In active mutual fund, fund manager goal is to beat the benchmark, whereas index fund goal is to replicate the benchmark. Now try to understand this. Since in active mutual fund, the fund manager actively buy or sell stocks from the mutual fund, the ultimate goal is to generate higher return than benchmark. Here benchmark could be your Nifty 50, Nifty 100, Nifty Midcap 150, etc. based on the fund category. However, in index fund, the goal is to simply match the performance of the index and keep the same allocation in the index fund as per the underlying index. Then third criteria is performance. Active mutual fund performance depend upon mutual fund manager's stock buying and selling decision. Hence, some active mutual fund can outperform the benchmark, whereas some can underperform. Whereas in index fund, the performance depend upon the underlying index performance, as the index fund simply replicate the index. Then fourth criteria is expense ratio. Expense ratio is basically the fee of mutual fund. Actively managed funds typically have higher expense ratio. The fee covers their cost associated with research, analysis, and the active management of the portfolio. Then index fund generally have lower expense ratio as compared to actively managed fund. Since they follow a passive investment strategy and require minimal research and analysis, so the management fee and operating expense tend to be on the lower side. Then final fifth criteria is risk and volatility. Active funds may have higher risk levels as they can deviate from the index and invest in higher risk securities based on fund manager's judgment. Ultimately, the risk and volatility of active mutual fund depend upon their investment strategy and the assets they hold, whereas index fund aim to provide broad market exposure and diversification that helps in reducing stock-specific risk. However, they are still subject to market risk and fluctuation in the underlying index. I hope you got the difference between active versus passive mutual fund. Now the next question is, which is better between index fund and active mutual fund? Let's find out. To understand which is better between index fund and active mutual fund, we need to understand the pros and cons of both style of investment. As discussed before, in active mutual fund, the fund manager take the decision of buy or sell of stock with a goal to generate higher return than the benchmark index. Now, if the fund manager has the right skill to identify undervalued stock or take the advantage of market opportunities, then it might beat the benchmark. So in active mutual fund, there is a potential to generate higher than benchmark return. Although there is no guarantee that every active mutual fund will beat the benchmark. Wrong stock selection can even result in underperformance. So active mutual fund performance depends upon investment skill of fund manager. On the other side, index funds simply replicate the underlying benchmark. So index fund can't outperform the benchmark, but at the same time, they might not underperform badly. So you can expect similar returns to the underlying index minus the tracking error. So index funds are more consistent with the index, that is the benchmark. Then second, active mutual fund charges higher expense ratio, whereas passive funds have lower expense ratio compared to active fund. This expense ratio is one of the important criteria before shortlisting a mutual fund, as high expense ratio reduces the final return of mutual fund. So lower the expense ratio, better it is. Overall, if we conclude, there is no fixed answer to which is better between active versus passive mutual fund. If you invest in active mutual fund, you have chances of outperforming the benchmark, but at the same time, there is risk of active mutual fund underperforming the benchmark, whereas with index fund, you can't outperform the index, but there is at least a good probability of generating returns similar to index. Now, if you look at historical data, of late it is getting difficult for active mutual funds to beat the benchmark, especially in large cap category. So if you ask me, personally I prefer index fund in large cap category and active mutual fund in mid cap and small cap space. So you can consider building a mutual fund portfolio of both active and passive mutual funds. So in this video, we discussed what is an index fund and key difference between active versus passive fund. We also covered which is better between active and passive mutual fund. I hope this video will give you a good picture to understand the key difference between active versus passive mutual fund. And if you want to invest in mutual funds, you can download Guru app. I'll see you in the next video. Till then, take care.